Hey everybody, Real Estate Ninja here. I hope you're doing great. We're going to talk about the banking sector. We're going to talk about banks that were just recently fined for a money scheme. These are not banks in America, but I want to assure you this. As more and more banks get found for fraud, for manipulation, what happens is around the country and around the world, it has these fractions that have these ripple effects into other banks. Why? Because banks invest in other banks. And not only that, politicians around the world are trying to make their mark, trying to get reelected, and trying to raise money. And how do you do that? You fine or possibly imprison certain bankers, right? Now, is this going to be something that's going to change the whole banking system? No, but I wanted to bring you this story because I think it's very, very impressive. It's out of the Daily Huddle. It's entitled $992 billion banking giants fined for role in global billion-dollar payment scheme. It says 3 banking giants and an additional financial institution are paying multi-million-dollar fine for their role in the global billion-dollar fintech scam. The Monetary Authority of Singapore, the MAS, has fined DBS, OCBC, Citibank Singapore, and Swiss Life. Now you notice one of these banks are Citibank Singapore, so you can already see that this could affect Citibank here in America, right? So their Singapore arm is being affected. And Swiss Life. So we're talking about multiple different types. We're talking about money. We're talking about banking and insurance. All right, for violating anti-money laundering and anti-terror financing laws connected with the $2.1 billion Wirecard AG scam. The MAS says the financial institutions, which collectively have $992 billion, almost $1 trillion under asset management, failed to properly investigate large transactions, conduct, and maintain customer due diligence and determine the source of wealth for high-risk customers. Wirecard, the infamous German-based payments firm, admitted back in June of 2020 that $2.1 billion in cash on its balance sheet, which was supposedly held by Asian banks, did not exist. Now, another point I want to make, that as more and more of these schemes come out, the banks are getting fined, people are being fired or imprisoned, banks are going to get tighter with their lending, which will affect real estate, okay? So see how I can tie this together? It doesn't matter what's happening in the bank. If it's bad, it's going to finally make its way eventually through to the real estate markets. Why? Because they're going to do a couple things. They're going to issue less loans, so it's going to get harder to get a loan. They're going to have higher rates and higher fees, okay? So you're gonna get hit 3 different ways, and that will cause less and less people to buy real estate, which will in turn cause real estate to go down. All right, the MAS here says that the financial institutions will collectively pay 3.8 million Singaporean dollars in penalties for their role in facilitating the scheme, which is worth about 2.8 million USD. As Singapore grows in importance as an international financial center, MAS expects our financial institutions to step up their controls against facilitating illicit financial flows. They must implement robust measures to know their customers, monitor ongoing transactions, to ensure that these are consistent with their understanding of their customers and their businesses, and exercise greater man, the real estate ninja's at a loss for words right now. When customers use complex structures. Point being is this, all joking aside, more and more banks are going to get fined, more and more. It is going to get costlier and harder to obtain loans. Why? Because banks are going to start freaking out, and they're going to want to make sure that all eyes are on these financial instruments and products that they're pushing, and they don't want to get fined. Even if they go, hey, shoo, we'll play the simple fine, and it was worth it because we made a ton of money, the press alone is going to cause them to be in the hurt locker. Why? Because the world is starting to wake up, and they don't want to do business with people that are doing bad business or illicit business. And so they're starting to finally wake up to that fact. So you want full service broker? It's going to cost you much, right? I mean, people know that when you're dealing with stockbrokers, it costs you a lot to have a full service brokerage as opposed to your E-Trade, TD Ameritrade, or even Robinhood apps. The same goes for banking and getting loans. If you want full service, you want good security and all that kind of stuff, it costs more. And so you're going to start to see these fly-by-night banks, I think, dry up. They're going to stop doing loans. And these bigger banks, and you're talking about 3 banks, with a combined asset base of almost $1 trillion. These are nothing to laugh at or nothing to put your nose up at. These are big financial institutions, and I think that you're going to see this get more and more common, and you're going to see lending get tighter and tighter. Guys, I hope you got something out of this. Thanks so much for watching. The Real Estate Ninja is out.